Growth strategies and scaling up are critical phases in the entrepreneurial journey that involve expanding the business beyond its initial startup stage to achieve sustainable, larger-scale success. This module offers an exhaustive and comprehensive exploration of the approaches, challenges, and best practices involved in growing and scaling entrepreneurial ventures. While launching a business is an important milestone, the ability to systematically grow revenue, customer base, operational capacity, and market presence distinguishes successful entrepreneurs from those whose ventures plateau or fail. Effective growth requires strategic planning, resource mobilization, operational readiness, and adaptive leadership. This module equips learners with detailed knowledge about growth frameworks, scaling techniques, market expansion, innovation management, financial scaling, and risk mitigation to confidently steer their ventures to higher levels of achievement. Understanding business growth and scaling. Business growth refers to the increase in size, revenue, market share, or operational scope of a company. It can be organic, internal growth through increased sales, or inorganic, through mergers and acquisitions. Scaling up involves expanding business operations efficiently without proportional increases in costs, allowing for improved profitability and sustainability. Scaling focuses on building capacity that can handle increased demand without sacrificing quality or control. Entrepreneurs must distinguish between growth and scaling to apply appropriate strategies and avoid pitfalls. Types of growth strategies. Market penetration. Moscone gas and Greece 1. Increasing market share within existing markets through aggressive marketing, price adjustments, or improved service. Market development, or increase was entering new geographic regions or market segments to attract new customers. Product development. Shas. Innovating or adding new products or services to the current portfolio to meet evolving customer needs. Diversification. Expanding into new markets with new products, which can be related or unrelated to existing offerings. Each strategy carries different risks, resource requirements, and timelines. Building scalable operations. Scalability requires entrepreneurs to standardize processes to handle increased volume consistently, invest in technology and automation to improve efficiency, build a strong team with delegated roles and leadership capabilities, develop robust supply chains and vendor relationships capable of supporting expansion. Implement scalable financial systems for budgeting, forecasting, and reporting. A scalable business can increase output and revenue while keeping incremental costs low. Financing growth. Scaling often requires significant capital injection. Entrepreneurs should consider reinvesting profits, using earnings to fund expansion. Equity financing. Raising funds from investors who seek ownership stakes. Debt financing. Borrowing capital with defined repayment terms. Strategic partnerships. Collaborating with other firms for joint ventures or resource sharing. Government grants and subsidies. Non-dilutive funds supporting growth initiatives. Choosing the right mix depends on growth stage, industry, and entrepreneur's vision. Innovation and continuous improvement. Sustained growth demands ongoing innovation and adaptation. Product-service innovation. Refreshing offerings to maintain competitive advantage. Process innovation. Improving operations to boost productivity and reduce costs. Business model innovation. Rethinking how value is created and delivered. Continuous improvement frameworks such as Kaizen and Agile methodologies support dynamic growth. Managing risks. During growth introduces complexity and risk. Overextension of resources leading to cash flow problems. Dilution of company culture and customer service quality. Operational bottlenecks and supply chain vulnerabilities. Increased competition and market volatility. Entrepreneurs must conduct risk assessments, develop contingency plans, and maintain financial discipline. Leadership and organizational development. Scaling requires entrepreneurs to evolve as leaders. Shifting from hands-on roles to strategic management, building leadership teams and fostering a positive culture, encouraging innovation and empowering employees, enhancing communication and decision-making processes. Effective leadership is a catalyst for successful scaling. Real-world examples. Facebook's strategic expansion from a university-focused network to a global social media giant demonstrates market development and product innovation. Small local businesses scaling through franchising to enter new geographic markets while maintaining brand standards. Startups leveraging cloud infrastructure to scale IT operations rapidly with minimal capital expenditure. In summary, growth and scaling represent transformative phases in the entrepreneurial lifecycle. By understanding diverse growth strategies, building scalable operations, securing appropriate financing, fostering innovation, managing risks, and developing leadership capacity, entrepreneurs position their ventures for enduring success and impact. This module provides comprehensive insights and actionable frameworks for navigating growth challenges and opportunities confidently.